said, why would the owner of a business want to see his financial statement at the end of the year? Want to assess the performance and the progress of the business, which is part of it. To determine the market value of the non-current assets, no, because you're not supposed to determine the market value of the non-current asset if you are not disposing them.
Yeah.
So there's the principle of going concern. So 2 is not part of it at all.
Yeah.
Business should be run as if they will continue to be forever. Do you understand?
Yeah.
So if you are talking about the market value of your non-current asset now, do you want to sell that? Do you want to dispose your asset?
No.
Do you want to close down your company?
No.
So 2 is not part of it. To make informed decisions for the following year, yes. It is 1 and 3. Is it clear?
Yes.
So question 33 is B. Question 34.
That's one of these questions.
Charlie is a car dealer. Joe wanted a new car and went to Charlie's car showroom. On Monday, Joe took a car from a test drive and decided to buy it. On Tuesday, Joe arranged to pay for the car by check. On Wednesday, Joe collected the car and received an invoice. On Thursday, Joe's check was cleared by the bank. On which day was Charlie able to account for the profit of the sale? On Wednesday. Why is it on Wednesday? It is on Wednesday because that was the day Joe accepted the liability.
That was the day the transaction went on.
That was the day he accepted the liability.
I accept.
Do you understand?
Yes.
Yeah, transaction happened. Transaction could happen on the phone.
Oh, yeah.
But remember, we talked about the matching concept, right?
Matching concept.
Is it matching up? No, prudence.
Prudence, yeah. Okay.
Where you must not calculate your assets. You must not calculate your profit when it is not ready.
Yeah.
You remember that?
Yeah, that's prudence, yeah.
It's prudence.
Yes.
You must not calculate your profit if the customer has not accepted the liability.
That I overstate.
Huh?
Overstate profit.
It will overstate your profit, yes.
Yeah.
It's not even normal. The principle of accounting does not accept it. That's why we have prudency.
Yeah.
Do you understand?
Yes.
So this day, on Wednesday, is the day Joe accepted the liability. And he received the invoice.
Yeah.
Because it was on credit. The check has to clear the other day. Do you get it now?
Yeah.
An invoice was given. If Joe paid cash, he would have received a receipt, not invoice. He received an invoice because he has not paid. It was a credit. He bought on credit. A check has to go on clearing before the amount is being debited or credited to Charlie's account, which was the next day. Do you understand?
Yes.
So the day Joe accepted the liability is on Wednesday, and that is the day Joe is liable to pay. And the last question: which accounting objective requires the financial information is provided in time for a decision to be made? Relevance. The principle says that whatever information we need, it must go in line with time, so that we will be able to use it for what we need to use them for. So it has to be relevant.
Yeah.
So the answer is B. Done.